Power of the retail investor. GameStop stock situation explained. January 28, 2021. Disclosure. All opinions presented here are purely my own and do not represent my firm or anyone associated with it. Hello, hedge fund managers. There are new kids on the block, and they're ready to squeeze you out. Hedge funds are responsible for hundreds of billions of dollars. Their managers are worth billions of dollars. They're essentially skilled gamblers in the casino that is the stock market. Yet retail investors are crushing many of them since the stock market crash in March 2020. Why is this happening? In a market where the US government is printing trillions of dollars and essentially giving money away for free by cutting interest rates to zero, the retail investor has more power than ever before. With the amount of money the US government has given to its citizens, a lot of folks are discovering investing like never before. Stock trading apps like Robinhood, eToro, Wealthsimple, and others are exploding. These apps allow you to buy and sell stocks, all from your phone, with minimal or no fees on each trade. For most Americans, they have access to the stock market like never before, which has traditionally been run by hedge funds, banks, and other financial institutions. With the COVID pandemic, stimulus checks, rising unemployment, people sitting at home bored, and multiple simple stock trading apps, this environment has created the perfect conditions for people to make and lose tons of money. Enter GameStop. Last week, a Reddit user posted a long-form post about GameStop on a popular subreddit called Wall Street Bets. This subreddit is full of people who discuss what stocks they like and why. It has essentially become a community for retail investors. The post is here, but the gist of it is that Ryan Cohen bought 12% of outstanding shares of the company recently and has been elected to the board. The reason this is significant is that he started another e-commerce company called Chewy, which is like the Amazon for pet products. He sold it in 2017 to PetSmart for $3.3 billion, the largest e-commerce transaction ever at the time, and built the business into an e-commerce juggernaut. This Redditor posited that if Ryan was able to reshape the management team and shift the business into an e-commerce play, it could grow into a massive behemoth. The online Reddit community, many of whom are gamers, know GameStop very well, as they've been going to their stores for years to buy the latest games and consoles. While all this was happening, a number of short sellers and hedge funds put huge bets to short the stock. This means they were hoping the stock was going to lose its value, where they could make a ton of money. They shorted 140% of shares of the stock, which makes no sense. In simple terms, if you have 100 shares of a company, they shorted 140 shares, which is impossible. So you may be thinking, what is short selling and how does it work? To short a stock means you borrow shares that you don't own and then sell them to another investor. You short a stock if you feel strongly that its share price is going to decline. Short selling allows investors to profit from stocks when they go down in value. Let's use an example. Say you decide to short company ABC at $100 a share. You think the stock is going to go down, so you borrow 10 shares from your broker for $1,000. If the stock goes down to $90, you then buy back those shares for $900, return the shares to your broker, and you keep the $100 profit. Short selling can be profitable if you make the right call, but it's very dangerous because you have unlimited downside risk with limited profit potential. This is the complete opposite of buying a stock because it has unlimited profit potential with limited downside risk. What does this mean? When you buy a stock, the most you can lose is what you pay for it, never more. With short selling, this is completely reversed. There's a ceiling on your potential profit, but no theoretical limit to the losses you can suffer. Using company ABC as above, Say you borrow 10 shares of the stock short at $100 a share. If the stock goes to zero, you get to keep the full $1,000. But if the stock rises to $1,000 a share, then you'll have to spend $10,000 to buy the 10 shares back. That gives you a net loss of $9,000, 9 times as much as the initial proceeds from the short sale. If you think losses like this seem crazy, ask Melvin Capital Management. They're a hedge fund that started in 2021 with $12.5 billion and have lost billions since the start of this year. As of this article, they say it's down 30%, but it's likely down a lot more. Their losses have come from various short bets against companies, among them being Gamestop. However, this is just the tip of the iceberg. Because a lot of hedge funds play the same strategies as other hedge funds, they're also down. As per a tweet from Chamath Palihapitiya, heard something from a prime broker. Number 1, biggest 4-day degrossing from hedge funds they've ever seen. Number 2, multi-strats lost last week. Traditional long-short guys this week. Hearing funds down anywhere from high single digits to 25% year to date. Markets only down 2.5%, so retail buying as fund selling. 25% year to date. If you have $10 billion, that's $2.5 billion gone. And this is January 2021. So in 1 month, you've lost that much money. So what did Redditors and retail investors do? They executed something called a short squeeze. It's where a stock sharply jumps higher, forcing short sellers to buy in to not incur greater losses. Their scramble to buy only adds to the upward pressure of the stock price. So let's use GameStop's chart as an example. On January 12th, 2021, the stock was trading at $19.95. On January 28th, 2021, the stock price was at $347.51, a 1,741% return in 2 weeks. Just look at this chart and pay close attention to the y-axis. That rise is not normal. Checkmate hedge funds. This ruined short sellers like Melvin Capital and others. Now they've had to look for additional capital to cover their losses. This is also the great irony because hedge funds have buddies with money in high places to just bail them out. When the average person gets ruined by the financial trickery these institutions pull, just like they did in 2008, no one bails them out. Redditors and retail investors with $600 stimulus checks and Robinhood accounts are here, and they're ready to make themselves richer at the hedge fund's expense. What the internet has done is completely democratize information. Hedge funds now have no advantage over the average person in how to invest, and people figured out the tactics they've used to essentially squeeze them out. What makes this time unique is individuals are banding together like never before to ruin hedge funds. If you don't believe me, look at this post below. Wall Street Bets writes an open letter to CNBC. They are going to single-handedly change the investing industry. An open letter to CNBC. Before you spend another day hosting your shill hedge fund buddies to come on air and demonize Wall Street Bets, I hope you read this. Your contempt for the retail investor, your audience, is palpable, and if you don't get it together, you will lose an entire generation of investors. I keep thinking about these funds that are short GameStop, like your boys at Melvin Capital, / your coverage of this subreddit, and I'm getting madder and madder. These funds can manipulate the market via your network, and if they screw up big because they don't even know the basics of portfolio risk 101 and using position sizing, they just get a bailout from their billionaire friends at Citadel. Then they have the nerve to turn us into public enemy number 1 just because we believe in an underdog company getting a second chance. We don't have billionaires to bail us out when we mess up our portfolio risk and a position goes against us. We can't go on TV and make attempts to manipulate millions to take our side of the trade. If we mess up as bad as they did, we're wiped out. Have to start from scratch and are back to giving hand jobs behind the dumpster at Wendy's. Seriously, fuck these people. I sincerely hope they suffer. We want to see the loss porn. Again, not safe for Reddit, but, it really talks to you about the messaging that's there. A community of people has been energized online by their hatred of what Wall Street has done to them for so long. For generations, banks and hedge funds have been able to manipulate markets, and now a group of individual investors is effectively doing the same thing back to them. Hedge fund managers are definitely getting nervous, and don't think that this will be the last one. So here are a few lessons I learned from this whole ordeal. Number 1, never short stocks. Short selling is a dangerous game, and unless you fully understand how it works, it's a terrible way to play the market. Number 2, the stock market is a legalized casino that has been run by financial institutions for so long. Number 3, never bet against the internet. It will always remain undefeated. A number of smart investors, even ones I know, have talked about how this time feels very similar to what happened in the pre-tech boom prior to the dot-com crash in 2001. But this environment is also different. By manipulating markets and forcing Robinhood to shut off the ability to buy and sell freely, financial institutions have energized this community more than ever before. People across the political spectrum are realizing that Wall Street manipulating the market in favor of itself is disgustingly wrong. Many of these people talk about the benefits of capitalism and the free market. But how can the market be free when not everyone plays by the same rules? With more stimulus money on the way, more people in the market than ever before, and 0% interest rates, who knows how long this can continue? This feels like a significant moment in time. History teaches us this won't last forever, but given the blatant market manipulation that is happening in front of our eyes, the next several months are going to be fascinating to watch. P.S. Here are some great memes for your enjoyment. Keep going. You're doing great.